We have Dr. Tan provide us with further insight based on questions from participants. So Dr. Tan, we have our first question here that was selected. How is the market outlook for year 2022 and 2023? And what are key factors to watch out? With the global chip shortage due to supply chain disruption affected by COVID-19, inflation, tapering, potential hike in interest rates, SME impact from COVID-19, where is the opportunity? Dr. Tan.
Yes, I think the market in US is very important because the market in US is not low. And not only that, they got so many key factor which is also on the high side. So that's something that you need to worry. So that's why we say we are cautious. We are cautious. While you are cautious, you can see in China, in ASEAN, some shares are actually still trading at a very low price. So you need to. This is in short, 2022, 2023, because US is very high, and if US come down, it will affect us very badly also. So we need to be very careful. So we need to select stock that is undervalued and able to grow. Undervalued, able to grow, and with a good. I always emphasize that with a good CEO. This is something that you need to be careful. If you know how to pick stock, go ahead. I always say that. But if you have no time, you don't know how to pick stock, then go and pick a fund manager. Okay. So that is my strong recommendation. There are a lot of problems. Actually, there are more problem. Actually, there are more problems than what I have mentioned. I basically concentrate on USA because we think USA has a strong influence. Basically, in Europe also, there's not that they have no problems. They have political problems. They have so many other problems. So, but that's why value investing is popular, because value investing, you just based on the value. If you think it's undervalued, you buy them for longer term. In the longer term, you most probably. That's why you notice that most of our accounts also we raise our cash. That's why we said never fully invest at all time is actually a very good philosophy. If you're fully invest, if the market crash, you will temporarily got hurt at the max. But if I have cash, I cash out some, especially some of those stocks that have make a lot of money. I have some cash. When the market crash, I have the money to buy. That's very key. If you're fully invest, you have no money. You not only that, you fully invest, you will hurt at the max, and people will come and redeem. You will sell the share further down, so your performance will be quite bad. So what we did is that we always anticipate in advance. Okay, I think I better stop here. I hope I answered his question. Yeah. Have I? Are you happy? Are you happy with my answer?
Are you happy? I'm going to post this to the chat.
Yeah.
And see, are you happy with the answer? Yes, we have Michael Chan say happy. Thank you, Michael.
Good.
It's very insightful.
Always welcome you all to write us email if you have anything. I think our company is here to add value to the industry. We are here to add value to the society. If we can help you, we help everybody. You help the market also. Thanks. How do you see China SOE banks fair next year?
Yes, I'm going to read this out, Dr. Tan.
Yeah, okay, go ahead.
So how can you still talk about investing in China now that the country is becoming more and more authoritarian? So yes, Dr. Tan.
Okay, I think if you study carefully, every country got problems, Malaysia has its own problem. You don't have this, you have that. China also you don't have this, you have that. Not to mention, do you think that there's no problem in USA? USA got more problem than ever, Europe is the same, they have different problems, So, but there are good companies. There are good company in Malaysia. There are good company in Europe. So we cannot just generalize. The worst thing to do is to generalize. So you need to spend time and analyze. Don't simply, say something, I mean, you must have heard of statement before, you should get out of this country completely, run for your life, But actually, you make a lot of money, you look at in Malaysia, look at that. You have company listed less than 2 years, you go up 22 times, You have Indonesia also same, you buy in the crash, you go up 10 times, But in US, you also have that kind of company. Yeah, you need to analyze. You don't need to be so pessimistic. You need to analyze and find a formula. My answer is always that your knowledge, your experience, your wisdom, and your analysis will help you. You will make money much more than what you put in your saving account or your fixed deposit. Okay, I hope
Okay.
I have answered that.
Yes. So
Any
a lot
more
of
questions?
research, a lot of knowledge, or some level of knowledge will really help
We,
investors.
we work very hard, we work every Saturday for last 28 years.
Wow. That is
I, I,
hardworking.
I
We
work
can take
every
and
Saturday when I work for other people for 18 years, even though
okay.
it's not a working day.
So Dr. Tan has your back. Now we have another question here, Dr. Tan. Do you still see any potential business growth today, especially in ASEAN countries?
Oh, definitely. We are very bullish in ASEAN. ASEAN may have problem here and there, but there are still a lot of company that's very undervalued. But the difficult part is that I think you need to have a bit of knowledge in the social psychology. During this time, which are the favored sector? Why are they favored? And the shares are very funny. When it goes up, high PE, it get higher and higher. You look at Tesla. Tesla is most amazing. Selling at such a high PE, and then people still like to go and trade here, trade there. But if you don't like to take that kind of risk, then don't go there. There are other way to make money. There's so many ways. Firm asset management way of making money is not definitely the best, but in the long run, we have found this formula and we have shown you that in the long run, we have been able to outperform. But it's not as simple as that also. You need to work very hard. You need to be very sharp. You need to know what other people are trying, what will do. Then we always say that when you want to buy a share which you think you have potential, you buy them early. You don't let them run so much before you. Easy to say than done, but not so difficult either. So
Yes, tracking the market. Yeah, and kind of having that
so
foresight.
we definitely very bullish in ASEAN because ASEAN has so many good factors. We have underage people, your productivity is there. And now the technology has opened up. You don't have to go to, not because I have not been to the elite school, but you see a lot of people, they working hard become very important. You know. Sometimes, there's a lot of opportunity, I would say.
Okay. Okay.
Population, young populations, technology is there, the size is there.
Mm.
You are no different than any other people. You need to work hard to go for it.
Mhm. Okay, so we have this emerging energy in this sector or in this area of the world. Dr. Tan, now these are other questions here. We have two. First up, how do you see bond market performance in short term, where low interest rate and high inflation? Shall we just go with that one first, and then we go to the second question later?
That's a good question. That's a good question. Definitely, if you have money today, what will you do? You can put in a saving account, you can put a fixed deposit, you can buy bonds, okay? Then you can buy gold, you can buy share, you can buy property, you can go to crypto.
Mm.
Now, if you ask me, let's answer the question first. Now, the interest rate is low. The interest rate is likely to go up. Plus, you ask a very good question. When the interest rate is low without inflation, they can tolerate that. But now you're facing inflation. The interest rate cannot stay low. The interest rate is likely to go up with higher inflation. Now, under that environment, if you were to buy the bonds, you will buy short-term bond. you will not buy long-term bond. Now, by buying bonds, the treasury bill, government bond, you think it's safe, but actually it's not safe. You buy the long-term, the interest rate go up, you lose money. By losing money means it's not safe, right? Okay, my long story short is that if you go into fixed income, you go into bonds, you have to go short-term. So at the most, you hold until maturity, you still make your money. But you will buy long-term, your discounted factor will make you lose money. I hope
Okay.
I have answered the question.
Okay, you gave us some strategy there as well. Now, second question, how do you see global equity performance once starts to increase interest rate or once interest rate starts rising?
Now, I think if you look at the track record, look at every time when the interest rate go up, the market suffered, or most of the time. Why? Let's say you have a housing loan, and most people have, super rich don't have. Yeah. Okay, now you have a housing loan. When the interest rate increase, your monthly payment goes up. That means your disposable income go down. So it will slow down the economy. So, but by tradition, also when the interest rate go up, I mean logically is that the cost of doing business has gone up. Then it may affect your profit. So based on that logic, interest rate go up, the market will come down. Particularly when the market is very high. Which country has a very high market? US, and US has a strong influence. So that's why we are careful. Unless it's super undervalued, unless they're in the growth sector, their growth is so fast that, and the PE ratio you buy is so low that it's like worth taking the risk now. So okay, I hope I've
Okay.
answered the question.
Yes.
Yeah. Any more question? What is your
Yes, we
view
have.
on crypto market? Crypto
Right.
market.
Right.
Okay.
Are you having this question, Dr. Tan? We have this other question that
Someone
was.
asked, I read.
Okay, I have was one for you here.
Okay.
Why has firm not launched any other new fund for the past 15 years, and why a launch of new funds now? Interesting.
Okay, this is a very good question. Okay, I think the question you asked really benefit us. Now, why? Because I think when we first started, we actually, firm asset management started with many institutional clients. We used to manage GIC money. We used to, when we have EPF, we were first fund manager appointed by Norway government. Yeah. So the retail doesn't really make a big impact to our income. But despite of that, we started the three fund in 2002. We only started balance fund and income fund. We think the retail people shouldn't take too much risk. We are a big capo, very busybody. So we did that. Then we built up the record. Then people said, why didn't you diversify our money into the regional? Then 2006, 4 years later, we started the two Asia Ex Japan fund. One is Asia Ex Japan, one is Asia Ex Japan Islamic. Then we say, okay, you need to build your record because we are boutique, we are small fella, So we concentrate basically building our track record. And lucky enough, actually, in fact, all the funds have done quite well. Some is more outstanding than the other. Dana Momo is being one of them. But it's also taken. Last year, our Asia Japan Fund has done well. We take all the 3-year, 5-year, and 10-year. That was quite a surprise. That's because ASEAN has done well and we are very good in ASEAN. Okay. So after we felt that, your reputation is building up the track record. So before we build up the track record, we felt it's also difficult to sell if you don't have a good track record. So we just concentrating, building, and concentrating and making sure that our fund has done well. So now we have built this record and we think we have done well. Why don't we diversify risk for the client again? So diversify by going to Greater China, diversify by going to ASEAN, diversify in doing global ESG. Global ESG is because I think the demand is there. All the entrepreneurs now are more conscious on what the businessman will do to the world, you know. So I think this is one area where I think most fund managers should do. You know, you have a strategy that is a responsible strategy that is also sustainable. So in the long run, hopefully that even you as a small, even you as a ordinary investor will also support that idea. So before it come that we started this. So if you look at what we launched, these three products is actually supplementing what we have, and I think it will be welcomed by the investor.
Thank you, Dr. Tan. Now, I think this question you have answered somewhat earlier. The US markets, example, S&P 500 Dow Jones has outperformed the China markets for the past 10 years. Should investors be bullish on China?
This is always a problem. You look at ASEAN index. ASEAN index actually has not done well. So if you analyze a company by saying that, okay, your index doesn't do well, so I don't want to come and invest. But it's not true. You see, investing is different. Investing is when they become very cheap, you come in. And even though your ASEAN index doesn't show that you make money that much, but when you come in at the low end, you make a lot of money. I give you one example. You buy the Dana Makmur fund when it was in March and April. Within a year, you make 50-60%, you know. You go into our Asia X Japan, I think 1 year plus you up double, you know. So it's the when the market is depressed or when the index is down, then you should go and buy rather than saying that, hey, hello, the index is no good, don't go there. I think it's not that way. Investing, you need to be flexible, you know, you need to be able to sense the value of the market. They may go up and down, and after a long while, the index may show you that you don't actually make much money out of the index. But an active fund manager who know how to take advantage, take a look at our ASEAN fund, we outperformed by 500%. Take a look at some of my account we manage for the big clients, you know, they outperform by a big margin, you know. Sorry, I hope I answer your question. Just like now the market is high, you don't simply, oh, just because it's growth sector, you go and buy. But if you don't buy the one that is too highly priced. So we that's why we can survive for 28 years.
You have your philosophy in investing. Very nice. Now, ASEAN in 2022, in particular Indonesia, what could go wrong in continued economic recovery theme? Okay, so I suppose it's economic recovery.
You specifically mentioned this question specifically mentioned about Indonesia, is it?
Yes,
is it?
particularly Indonesia. So more emphasis on Indonesia, yeah.
We are quite excited about Indonesia. I mean, we're actually excited about the whole of ASEAN. You know, especially every time there's a crisis. Okay, let me talk about crisis. Whenever people talk about crisis, they think they talk about the whole market. Actually, crisis come from the company. Crisis come from the industry. Crisis also come from the market. You take a look at last year. What happened to last year? Rubber glove went to the top, man, and also came down very badly. Okay, so you need to know how to handle that. Okay, so then you ask me, Indonesia got 280 million people, they're young age, you know, they got a lot of resources, you know, and they also grow. I mean, they have done a few right things in my view. They settle their labor so-called strategy. So more and more people come in and invest. What I'm trying to say is that as a fund manager, you have the flexibility to go and search around. I can tell you some of the shares are very cheap. Okay.
Okay, all right, get some tips there. Now, there's also this question that's asked, Dr. Tan. You have said that buying near the low is the best you can do. How will we know if the stock price or the stock index near the low? Okay,
Okay.
strategy questions, yeah.
I think there is certain discretion. There's certain research you need to do. Now, what we have done is that every ASEAN country we covered, we have like 30 years of data. Now, every year we single out the high and the low, you know. So when you look at the 30 years, you basically can feel one. Just the same as you look into any company. You look at his share price, you look at his economic, you look at his company's data, you can more or less feel. But sometimes when the share drop, first up, when the share was high and or not too low, you say, hey, I won't buy, I want to wait at the lower price. What happened last year when the share went to the lowest? The side say, oh, it may go lower. So, if you have that psychology, you always can get lower, but it will never happen. So, before you know the lowest, and there's no possibility for you to buy the lowest. There's only 1 or 2% who can buy at the lowest. So when you think near the low, and you analyze the company, you think it's undervalued, you think the management is good, the company has no gearing, and the industry is growing, and this CEO worked very hard for you, and it's already so low, and you say you want lower, it's not possible, and at the end of the day you do nothing. So that's why I have that statement, because my entire 46 years, there's only 1 or 2 times I hit the lowest, a few times, only very few. One of them is Astra Agro. I still remember. Astra Agro is the largest plantation company in Indonesia, listed in stock exchange. But the largest actually Indonesian was uh, Golden Agri. Golden Agri is actually listed in Singapore, but they are one of the largest. So when the share dropped limit down 3 days in a row, I want to park at the lowest, they take us out. So that is history, The lowest price bought Astra Agro was done by Pheim Asset Management. But that's only one of the very, very few times. So that's why I write this and say, use my experience and say, look, it's very hard for you, almost impossible to get the lowest price or to sell at the highest price. Okay, sorry.
Okay.
That's my answer.
Very nice. Dear Dr. Tan, given your experience in the industry/market since the 1970s, can you share your views on the current inflationary pressures, especially in the US market, and how should investors be positioned for the next 3 to 12 months?
3 to 12 months sounds very difficult. It sounds like, you have to trade, you have to trade. It's not something that we can do so well. But I mean, the easiest guideline I still think is the value investing. At any one time, there'll be some undervalued stock. So you need to know how to analyze not only just the company, but the industry and so forth. I mean, a very clear-cut example, rubber glove has grown so strongly last year, but the share run even much faster than that. And that's where you have an overvalued situation. Then when the profit drop, they overreact, When the profit go up, they also overreact. But you can always find this statement. Warren Buffett say that all the time. I think what is good is that our economy has grown so much in Asia that there will be some industry going up, there will be some industry coming down, and then you have to take a bit of longer But for example, when you invest in the company, you gotta let the guy to work on it sometime to make money for you. You know, you can't be expecting him to do it so fast. You know? But I'm just being maybe too this thing. Uh, 6 months sound very difficult for me. You know? Yeah.
It's
Sorry.
too far, too long a
Maybe
time
if
that
you are good, if you are very good technical analyst, you can still make money now. You know.
Okay, so due to time constraint, we can only answer the last question, all right, for this conference. And the rest you can actually email or get connected with Pheim. So this question comes from Evelyn Kirk. May I ask, what is your recommendation for asset allocation during this period of uncertainties?
We would really like to uh, have some cash now. You know, I still recommend people to take profit. You know, and if you, I mean, just to share with you the experience, which I think we were in the presentation. Before the global financial crisis came, our ASEAN fund raised 52% cash. We don't have such a high cash yet, but we do have, I mean, 20-30% cash, you know, in quite a number of accounts. In fact, we encourage people to put in more money now because I think uh, when we have the money now, when the market crash, we'll be readily able to buy. You don't wait until the time when the market drop. Then you say you want to start raising fund, and the people will tell you that no. Then the market goes up, then you will miss the boat. You'll miss the boat. We have done that many times. You know, when the market was high, it's easier to get money, and then we wait. We know which one to buy first. If we cannot find stock, we don't buy, and that is a skill, that is a wisdom, that is good value investing.
That stays in line with
Can
your.
we give them one more question? Then, yeah.
Oh, okay.
I always feel very bad, you know. People want to ask you question, you say no time, you want to go home, you know. So we give them one more
But
question, okay?
very kind, Dr.
Yeah,
Tan. He was very generous with his
we
time.
can do that. We can do that.
Okay, so let's select one more question to our team. All right, this last question here, it says, when do you realize your potential gain?
Oh, okay. When do you take profit, basically, if I'm not mistaken. Okay, I think going back, you know, value investing is good because if you think the share is overvalued, but when you think it's overvalued, he can even more overvalue. That one you can't help it, you know. Many times you sell share, they go up further. There's also no possibility to sell at the highest point or the other way, you know. So when you think it's good, but we have also another interesting strategy is that shares value is in the eyes of the beholder, and it can go to very extreme high. So sometimes when the share run, we just keep for a while, let it run and run and run, you know. And we don't have to like just because it's 34 PE, you know, you think it's high. The guy go to 100 PE, you know. Yeah, many of the stock are like that. Yeah. I mean, you give an example, you know, you rubber glove is one of the very good example, but some of the tech stock also the same. So you think it's overvalued, you think you have make enough, then you sell. That's the
Okay,
easiest guideline, but it's also value is in the eyes of the beholder. Actually, that you don't even know where's the value sometimes, you know. So it's a very difficult job. That's why after I cannot give you an answer, I say, okay, investment is an art. You know? When you lose money, also but saying that, I think I feel comfortable. I know how to handle the volatility. Even when I was in a university, I can tell you this. I read so many books. I say all these books cannot cannot survive in Asia because Asia is very volatile. And I think handling the volatility is very important. But how do you handle volatility before you go? I still think it's your knowledge, it's your research, it's your philosophy, it's your wisdom. Now, you cannot have all this within a short time. It's a lifetime learning process. Okay,
all right.
hopefully hopefully you're not disappointed. We try very hard.
Well, thank you
Okay,
so
okay.
much, Dr.
Thank
Tan.
you.
Thank you so much, Dr. Tan. Thank you so
Thank
much
you.
to all,
Thank you.
to everyone in the audience, and congratulations once again to our 3 winners. So as the conference comes to a close, we'd like to thank everyone for joining us in learning how firm and how you can grow your wealth through unit trust. With the information shared by the speakers, we hope that you are able to make the most out of firm research, experience, and investment philosophy. Firm believes in adding value to the industry and society. And should you have any further inquiries, do feel free to reach out to Firm.